friends, good morning. This is Manoj. Wish you a very happy new year. This is the Bank Nifty Futures blueprint for the trading day 4th January 2021. So before getting into the actual blueprint, which is nothing but the trading plan, we shall have a look at the daily chart, that is a higher time frame chart, to have a broader context of the market. So this is the Bank Nifty Futures daily chart. It closed at 31,309 the previous trading day. You can see this arrow mark pointing towards monthly CPR. This are the monthly CPR, and this has a nice higher value relationship. And this is the 30,500 is the monthly pivot for the current month. So in general, you have a strong higher value relationship of the monthly pivot. So hence any pullback towards this monthly pivot zone, that is around 30,400 to 30,500, is a nice buying opportunity. And I have also marked the key levels here. 32,733 is the all-time high. And the next important key level is 31,043, which is the swing support, which is nothing but the previous resistance turn support, which is also the low of the previous day and also previous to previous day. And you have another key level in the form of monthly pivot and also 20-day moving average, which is nothing but 30,400 to 30,500 zone. So in general, the broader context appears bullish. However, if you see the momentum indicator, which is nothing but the relative strength index, you can see a strong bearish divergence, which is nothing but the RSI is forming lower lows, whereas the price is forming higher highs. However, this does not mean that the overall price structure is bearish. This RSI, that is this bearish divergence of RSI, needs to be validated by a strong bearish price action. For example, let us assume, just in case if the price drops below 31,043, this is a swing support. So just in case the price drops below 31,040 and 31,000 and below levels, that could act as a strong evidence for a validation of this RSI bearish divergence. So until and unless we cannot come to a conclusion solely from this bearish divergence of RSI. So to conclude, in the higher time frame, the context is broadly bullish. So with this broader context, let us go into the trading time frame, which is the 5 minutes or 15 minutes time frame. So I have chosen the 15 minutes time frame. So before getting into the various components of this chart, I will actually first narrate you the key levels which I have already marked here. See, on the upside, 31,950 is a strong key level, which is nothing but monthly Camarilla R3. The next key level is a confluence of previous month high, previous week high, and weekly Camarilla R3, which is nothing but 31,550 zone. And you have 31,405 in the form of daily Camarilla R4, and then you have a very narrow central pivot range, which is around 31,310, this zone. And below the central pivot range, you have 31,210 in the form of daily Camarilla S4 here, and you have 31,150 in the form of weekly pivot. Hence, you can consider the 31,150 to 31,200 as a strong key level zone. And below that you have 31,000 zone, which is nothing but weekly Camarilla S3 and also previous week low, which is also a very strong key level. And below that around 3,550 to 3,600 you have monthly Camarilla S3 and also a monthly pivot, which is nothing but monthly golden pivot zone. Just in case this price happens to come through this zone should act as a strong support because it is the monthly golden pivot zone. Apart from this, you can also notice the congestion from December 30 onwards. This zone price has been contracting from December 30 onwards, and I have shown this in the form of a contraction in volatility, so which means that there are higher chances of price exploding in the days to come, but nobody knows whether it is on the upside or whether it could be on the downside. But you should be prepared for a trending move in the days to come, and the idea is to capture that trending move. I am very sure that many would have got whipsawed during the last 3 days by incurring quite a few losses, because these are the days where day traders will incur most of the losses. So best thing is to avoid this kind of trading days and patiently wait for the trending day to come, which should probably come during this week. That is, tomorrow it could come, or day after tomorrow, anytime during this week. So if we see historically, I marked arrows denoting denoting narrow pivot width range. This is the narrow CPR. This is the CPR width actually. This pen represents the CPR width. These arrow marks are actually days where price had a very narrow pivot, central pivot range. So after a series of narrow central pivot range, you can see an explosion, price explosion or price expansion, which is represented with this arrow. So after 2 consecutive narrow CPRs, you have a price expansion, which is the reason behind this reasonably wider CPR width. And here you had a series of narrow CPR width, and you had a mild expansion here, which is represented by this price action. So here you had opportunities both on the downside and also on the upside, and you had a very big explosion here, which is actually represented with this move. So in general, if you have a series of narrow CPR width, price tends to expand sooner or later. So the same logic would apply here. Price has been experiencing extremely narrow CPR, narrow pivot width range, which could potentially lead to an expansion, and you can see the volatility has been contracting massively. So the idea is to have a trading strategy which benefits from a possible expansion of price. So now let us concentrate on the upside. So ideally, whenever there is an anticipation of a trend, the ideal strategy will be a break of Camarilla level 4. That is, go long above Camarilla R4 with a stop just below Camarilla R4, and go short below Camarilla S4 with a stop just above Camarilla S4. So let us see where Camarilla R4 is. So daily Camarilla R4 is at 31,405. So going by that logic, the potential long trade could be about 31,405 to 410. But however, you have a key level which is closer to daily Camarilla R4, which is nothing but 31,550. So you never know how price would react at this particular zone, because it is a confluence of three key levels: previous month high, previous week high, and weekly Camarilla R3. So ideally your long should be above 31,550 with a stop loss of 31,450 and for a target of 31,950, which is the next important key level, which is monthly Camarilla R3. And similarly on the downside, you have a daily Camarilla S4 at 31,210. So the ideal trade should be short below 31,210, provided there are no supports close to 31,210. However, if you can see here, there are supports at 31,150 and also at 31,000. So you never know how price would react at these levels. So hence, it is always better to short below the lowest of the support, which is 31,000 zone, which is the confluence of Camarilla, weekly Camarilla S3 and also previous week low. So the second plan should be short below 31,000 with a stop loss of 31,100 and focusing towards the target of 30,550 to 30,600, which is nothing but monthly Camarilla S3 and monthly pivot, or in other words, this is the monthly golden pivot zone. So these are the two trading plans for 4th January 2021, which I have mentioned here. So I'll just briefly go through this. Bank Nifty Futures previous closing was 31,309. Higher time frame, HTF is higher time frame, which is neutral. Why neutral? Because the price structure is showing a strong uptrend. However, you can see a bearish divergence in the form of momentum oscillator. So to factor in this kind of divergence, and also at the same time to factor in this kind of a massive uptrend, I have mentioned higher time frame is neutral and lower time frame is bullish, as I mentioned, because of this volatility contraction post a major uptrend. Usually price tends to continue this trend unless and otherwise proven. So on the face, it appears to be a contraction that is waiting for an expansion on the upside, but you never know, anything can happen in this market. So ideally you should not, as a day trader, you should not have a bias on any direction. You should be always prepared with a trading plan wherein you can trade on both the sides, both on the bullish side and on the bearish side. That is the reason why we have trading plans for upside as well as trading plan for downside.